Hey everybody, Jake here with Jake Wu Market Research to go over the weekend video into the last couple trading days of October. And this video is really going to go over exactly what we discussed last week and see how the charts evolved from last week's video and go over, what worked, what didn't, all of that good stuff. But before we jump in, wanted to mention this is just going to be a quick overview of the weekly candles on ES, NQ, CL, which is crude oil, Bitcoin, NVDA, Tesla, Apple, and AMD. If you want more detailed information on price levels and daily and weekly charts for SPY, Qs, IWM, XLI, XOP, Google, Meta, and pretty much all the large cap names, you can check out my Twitter subscription. I have the link in the video description and you can check that out. It's only $10 a month and it's very easy to sign up right on Twitter. Also, I do have a partnership with Optimus Futures, so we are going over futures data. So if you are interested in a new futures platform, definitely check them out. You can actually just hook them up right to TradingView and trade right through the platform using TradingView for your charts. So definitely check out Optimus Futures. They are in the video description below as well with the link that you can check out the website. Now let's jump right into it. We'll start with ES. This is simply just the S&P 500 E-mini futures. And what we're going to go over is really what happened last week, which was simply the fact that we broke below the March pivot VWAP zone. That was the main area that we were watching here, so it's shown by this red circle. We did close below it. That triggered the next move down to the volume shelf below, which was also a confluence zone of the October 2022 pivot VWAP zone. And you can see price really stabilized, at least for the time being, right around this general area. And that goes all the way down to the bottom of the VWAP zone, and really the bottom of the volume shelf is right around 4105. If you want to give yourself a little bit of a range, I'd call it 4105 all the way up to around 4110. And so if we break down below that, we actually have another volume gap below, and that goes all the way down here to around 4025. That's where it starts. So you have a huge gap starting from around 4110 all the way down to 4025. And if we do break below, especially if we get a daily close below this 4105, you could definitely look at potentially moving down further. We've had two huge moves down over the last 2 weeks, so it'd be kind of a little shocking to see another just big candle down, but we're in a pretty interesting market. Yields keep going up, the dollar continues to strengthen, and that's definitely not helping the markets. There is a great case study to go over, though, before we go into the next symbol here. Notice here, we had this huge volume gap, and price was able to move literally right down through it. So if you're into football and you want an analogy on how this works, price is able to move through this area because there's not a lot of friction for price. There's not a lot of people who are holding. There's not a lot of volume that's occurred. There's not a lot of contracts. There's not a lot of shares, within this general area. So what happens is price can move very quickly through this area once you break through an area like this. So you had this break-even supply area. So if we move this over, notice how this area acted as your resistance zone, and then we pretty much moved right down through this void of volume. And so if you're into football, it's pretty much like if somebody gets through the main defensive line and then there's nobody after that until maybe 10 or 15 yards, that runner is able to speed up very quickly because there's nobody in front of them to stop them, right? So there's this kind of area where they could just speed up, and that's exactly what price does. It just speeds up through these areas of low liquidity, and then it gravitates towards this next area of liquidity, which is this volume shelf here, which is also the point of control. The point of control is just measuring the area that has the most volume at a specific price level. So if you're not familiar with the volume profile, this volume on the right-hand side is essentially just measuring how much volume has occurred since the October 2022 pivot. So we're measuring all the volume that's aggregated since this reversal point last year. And that's where essentially we're looking to see where are these pockets of liquidity, non-liquidity. You have a lot of liquidity in this area, this volume shelf. Let's say that you bought at 41.35 back in April or May. Into the summer, you had a ton of profit. But as you move back down and maybe you didn't sell any, as you get back down to break even, i.e. this volume shelf where a lot of people initially had shares or contracts, in this case, since we're looking at futures, this is where you're back to break even. So you have no more profit to sell. Maybe you scaled out 75% of your position and then you stop scaling out because you're back to break even. That's essentially why these areas create potential and short-term areas of support, because you have supply essentially drying up. So hopefully that was helpful in understanding how these volume shelves and the volume profile work. For NQ, talk about volume gaps. We have one here. So we did break down through this March pivot VWAP zone. This was the main area that we were watching to see if it would hold. This is another great example here of this overhead supply acting as resistance. Notice we got a pop, but we pretty much rejected right at the bottom of this area. So this is what I call, break-even supply. The people at the bottom of this shelf get back to break even. They sell out. That creates supply in the market. That creates a resistance zone. And then you continue to move down. Broke down through the March pivot VWAP zone, and now we're in this volume gap. And so we could definitely see price move very quickly down through this area. Doesn't have to, as I mentioned, this is 2 really strong downside weeks in a row. We have Powell speaking next week, so that's something to consider that may, throw a little bit of a wrench in this downside equation. But for now, it is worth noting this huge volume gap below. And, you don't want to assume that we're just going to go straight down to this next area of this volume shelf below right immediately or ever. It's just an area of interest below if we can't hold this December 2022 pivot VWAP. So that is currently at 3882.25. That's right here. So if we do get a move down below that area, then that's definitely where things get a little sketchy. But for now, we need to see that area hold first, and we need to see price even get down that low first. Notice here, this VWAP, this December 2022 pivot VWAP, which originates here, acted as support 1, 2, 3, 4 weeks in a row. We never got a weekly close below that area. So this is a really big line in the sand for price if we continue to move down. And if we don't, then this next volume shelf below would definitely be an area to watch. And that range is currently from right around 12,995 all the way up to around 13,290. So definitely a little bit of a range here, but the markets are very volatile. You're going to have larger ranges and larger moves in either direction. So something to keep in mind going into the week ahead. Going into oil. Crude oil actually had a pretty rough week. A lot of people thought that oil was just going to continue to move up because of the war, but actually I think a lot of that was priced into the initial move that we saw. And you can see here, we're still range bound. We discussed last week that until we can break above 95.75, which is the top of this SR flip and the previous resistance we saw back in late September, or break below this June 2022 high pivot VWAP zone, which is currently at around 81, we're pretty much just range bound here. And you can tell that price is definitely respecting this VWAP because we bounced off it once again last week. But really, over the last 3 weeks, we haven't really had much direction. And until we break above or below one of these areas, there's not much of a trend here. It's pretty range bound. I mean, if you look back since June, we're definitely in this uptrend and we're continuing to print higher lows. But over the last really 3 months, over the last 2 months or so, we're pretty much just trading in this $80 to $95 range, give or take. So until we break those areas, you could probably assume that we're going to continue to have range-bound price action here and not a lot. So as I mentioned, the lower part of this VWAP zone is at right around 81. That's currently 81. Remember, these VWAPs change just like a moving average as price and volume evolve. And then the upper part of this range is actually static, right? It's not changing because it's simply just an area of a horizontal area from previous price action, and that's not going to change. So 95.75 is not going to change. The lower VWAP zone is probably not going to change too much. Notice it's flattening out, but for now it is right around 81. If you want to give yourself a range, 81 to 81.25. Bitcoin had a huge move up. If you remember last week, we were watching Bitcoin right around 30,300. We were seeing it move up pretty quick, right near the bottom of this ascending triangle resistance zone. So I almost said descending triangle there. So notice here, we did have trouble getting above that zone, but then last week, we just pretty much had an impulse candle right up to this previous support zone here from January of 2022, and you can see this previous support zone. And remember, a support zone doesn't have to be an X amount of time. We just have to see price respect an area and bounce, and that's what we saw. If you look here, pretty much from mid-January of 2022 to mid-February of 2022, this acted as a very short-term support zone in a bounce area, and then we finally broke down through it in May of 2022. So now we're looking to see if we can get a close above this area. The top of this zone is at 34,350. And this is really just back to what I was mentioning last week, where this is now two huge moves to the upside in Bitcoin and two huge moves to the downside on the weekly candle for the broad markets, especially ES and NQ. So there is definitely a decoupling going on here. For the longest time, Bitcoin was really a great proxy for risk on or risk off in the market. And we're starting to see that change here. So is there something going on behind the scenes? This is the same exact type of price action that occurred before Silicon Valley had its collapse. Not saying we're going to have another collapse of a bank. Maybe there's something else going on in the background, but definitely right now we are seeing a decoupling here that's worth noting on Bitcoin and the overall broad markets. NVDA is another one we discussed last week. So you can see here that we're really trading right at this neckline. And so we've got this absolutely massive volume gap below, which is a function of definitely not a ton of volume that's occurred within this area, pretty much from 275 all the way up to around 415. But you also have an actual price gap here, and you can tell that we have a price gap here, and this is on the daily chart. Notice that there's no gap here on the weekly candle, but this impulse candle here was earnings in May. You can tell that there is a price gap in here, and this is just a little fun fact, because there's literally no volume. So we're measuring the volume profile from the October 2022 lows, and you can see here that there's literally no volume here at all. So we know that is a price gap because there's literally no volume at all. So if you ever are looking at a weekly chart and you don't see an actual price gap, but you see that there's literally no volume on the volume profile, that is representing the price gap essentially. So that's just a little fun fact there. Price gap goes all the way down to around 306, 307 from earnings. That would be a huge move to the downside. I think the main thing to focus on here is if we break below the $400 mark, which is both a psychological level, but also the bottom of this neckline of this head and shoulders, that's when things get a little sketchy. There is a gap below in the 395 area, so that would be your main downside target. But if you do want more information on this, I went over full details in the Twitter subscription on the daily and the weekly chart going into next week. And remember, this is earnings season. We've got a lot of earnings coming out. We've got a lot of things kind of influencing price, even though there isn't, maybe you are holding something that doesn't necessarily have earnings, you can still have huge moves in price if there's a competitor, if there's a partner that releases earnings and moves the price of the stock that you're in or you're watching. Tesla is definitely an interesting one here. This is now the third red week in a row that we've had. We discussed this confluence of this previous resistance zone back in February and March, and you can see here that the January 23 reversal VWAP is now your potential SR flip here with the horizontal zone and this VWAP zone. Tesla is just naturally a very volatile stock. So this range of this VWAP zone is literally from around 198.50 all the way up to around 208.50. So definitely a lot of margin of error here. So if you're wanting to trade something with not a lot of volatility, just take Tesla off the list because it's just naturally a very volatile stock, especially in this type of market that has increased volatility. That is something to keep in mind. But for now, we are holding above this VWAP zone, and that is really the main area that held. And you can see here that we had a slight close back in April below the bottom of this VWAP zone. So if you wanted to add a little more downside, and remember, that's how I'm adding these offsets, right? So this is a 5% offset. If you wanted to add a 5.5% offset to capture this close here, that's essentially why I'm adding these offsets, right? This, if we take this offset off, this is the actual VWAP. But notice here, price has not respected this VWAP that well since the January 23 reversal. So you really want to give yourself essentially a band, a margin of error band. In this case, the band is a function of the lowest close below that VWAP. So that is right around here. So then you just go kind of trial and error. And in this case, it is a 5.5%, and it's below the VWAP, so we do a lower band on TradingView, and you can see now we're capturing that. So if you did want to capture that exact close, now that band goes to around 196.75. So give or take maybe another $1.25 extra of margin of error there for you. But regardless, a very wide area with this VWAP zone, so definitely keep that in mind going into the coming weeks. I won't do a video probably for at least 2 weeks, so definitely these are levels to keep in mind for the coming weeks since I won't be updating this for a while. Unless you're in the Twitter subscription, I update the chart every day. Definitely on the daily, and then on the weekend, I do the weekly. So if you do want more analysis over the next 2 weeks that isn't in this video, check out the Twitter subscription. It's $10 a month, 33 cents a day. Apple is another one that is really a great case study. Last week, if you remember, we were discussing this volume gap below. Once again, the volume gap acts as kind of a magnet or a vacuum for price, and then a magnet down to the next area of liquidity. Well, the next area of liquidity was this pocket here, pretty much from 164.25 all the way up to around 165.75. And that's exactly where we got a bounce. So if we kind of pull this over a little bit, you'll see that price literally filled this gap perfectly and then bounced right at this next area of liquidity below. One note is that we did hold the actual January 23 reversal VWAP, so we did close right above that. The VWAP is currently at 167.73. So if we do get a weekly close below the bottom of this VWAP, and I would say the VWAP zone, but this is the bottom of this zone is actually the actual VWAP at 167.73. That's when things can get a little sketchy and really start to throw the bear thesis much harder in the direction of potentially even getting through this gap below and retesting these previous highs here. So pretty much from around 154.50 all the way up to around 157.50. So this is a big area to hold. Pretty much below the bottom of this area at 164.25 is an area you want to see hold. And especially you want to see this VWAP hold on the weekly candle close. Currently at 167.73. Obviously that will change because as price and volume evolve, this changes just like a moving average. All right, AMD. Last week I accidentally called AMD NVDA, but this is the AMD chart that we have here. We have this anchored VWAP pinch still forming here. Remember, a pinch is essentially when you have a swing high and a swing low, and you anchor a VWAP from each. And you can see price really starting to trade within this very narrow channel here, very similar to how Bollinger Bands work. The tighter Bollinger Bands get is because price is essentially consolidating in a smaller range, and that's what you get with these VWAP pinches as well. The smaller the range, the more tight the VWAP pinch gets, and really the better chance that you're going to have a very big directional move. Now, the question is, which way does that move? Well, since we're on a weekly candle chart, you want to look for a weekly candle close either below the bottom of this January 23 pivot VWAP, currently right around 95.80, right around 96. And then the top of this VWAP zone is currently right around 113, give or take maybe 25 cents. So until we break above or below, this has really been a range-bound trade, right? You could have easily taken the bottom of this VWAP zone over the last 5-6 weeks, traded it up to the top here, traded it back down to the bottom. And so you definitely had, especially for range traders, a pretty good opportunity just to trade this VWAP range that we're currently in, which is essentially that anchored VWAP pinch. So that is it. If you have any questions, you can comment below on the video comments, and or you can send me a message on Twitter. My messages are open, at least for the time being. Remember, I do have the Twitter subscription for $10 a month. I do daily analysis every day before the market closes most of the time, so you can get an idea of what the charts look like into the day ahead. When there's high probability trade ideas, I definitely share those trade ideas as well. But for the most part, I want to create the blueprint for traders, investors, any type of market participant, and then hand that blueprint off to you to use that how you would like. I don't want to be somebody who's just telling people to blindly follow trade ideas without anything really that you have to do on your side, right? Everybody has a different style of trading. I'm throwing out the blueprint of the idea, and then it's up to you and the individual subscriber to see how they want to take that blueprint and build their own trade. So that's kind of an analogy I like to use, is really I'm creating the blueprint, and then you take that information and likely use it with other information, right? It's only a $10 a month subscription, so it's really meant to complement other subscriptions as well. So maybe you do have a Discord that you're a part of that, maybe you just want to compare and contrast what am I seeing in somebody else's Discord versus what am I showing. And so that's really how I designed it, is not to be just the only thing you have. It's more or less to complement other services that you may be a part of as well, just to get a secondary perspective. Once again, I do have a partnership with Optimus Futures. The link is in the video description if you want to check them out. And as I mentioned, they're a futures broker, so you can actually trade through them using TradingView. And really, futures aren't for everyone, so definitely give the website a look and see if it's maybe something you want to check out. If not, no worries. And thank you so much for watching this video. Please like and subscribe if you enjoy these. I do have a ton of educational videos as well. I try to post those on Twitter as much as I can, kind of a curated post with all the videos that go over how to use TradingView. So definitely check that out on my Twitter as well. I'll put a link in my description to my Twitter account if you have not seen it. Everybody have a great weekend. Thank you for watching, and we'll see you next time.